Welcome to Markets Now. I'm Michelle Rook along with Nick Cholas with Farmers Keeper. And early trade here this morning in the livestock. Cattle have been mostly higher. The hogs kind of setting back here this morning. And we're mostly higher in the grains right now, except for some fractional losses in the corn market. Nick, let's talk about the soybean market. Of course, we've been pushed here by South American weather. Argentina obviously missing out on some rains, not much in the forecast. Do you think we're going to continue to see weather be the predominant factor that pushes that market? And can it finally get us to close above the $15 mark?
Yeah, it seems like that's what all eyes are on right now, because that's going to have some really big effects for the U.S. export program going into the 2023 crop. And it also comes into play with an acreage battle of what's going to happen here between corn and beans, and will some of the other row crops get pushed aside if we see prices continue to go up here?
Well, yesterday we couldn't close above $15, and I would assume there was a lot of farmers selling when we got above those levels on the charts.
It seems like it. I mean, we've seen in just our own portfolio of cash grain bushels being sold through us, a lot of offers at that $15 level, a lot of offers in the new crop $14 level. So that's probably why around midday, early morning, we saw that little bit of profit taking going on. And we'll see here as we're watching the open if that's going to happen again today, because we're right at those similar levels again. And hey, if $14 new crop is your worst sale, or if your last sale is $15 futures of what you've got in the bins, if you have any, that's not a bad place either way.
Yeah. So what is the price point that a lot of customers are looking at to make corn sales? I would assume, $7 is always the kind of the magic number there, but I'm sure there's some things below that.
Well, $7 is the magic number when the number on the board is $6, and when the number on the board is $5, $6 is the magic number. So that seems to be a moving target all the time. But look, right now it's funny when you compare levels of soybeans and offer levels that we see to new crop corn sitting above $6 again today here. We don't have nearly as many offers before we hit that level for new crop corn. So I think that's part of the optimism in the producer's mind always of where corn is going to be headed.
So Nick, talk about what cash basis levels are doing on corn, though, because they are some of the strongest that we've seen in 20 years.
It's funny. This conversation keeps happening and coming. And okay, the U.S. export program is going to be ending here. And then we saw a sale to Japan yesterday that kind of surprised everybody. I mean, relatively speaking, over the past month, just because of oil prices coming down and ethanol crush rates being way too high, we've seen ethanol plants at least scale back their basis a little bit, but still looking at some great levels. I mean, we're, with futures being this high, I mean, it's amazing the way exports have been that we're even sitting at these levels anyway. If you're a producer out there, you got to look and ask yourself, what percent sold am I at what prices, and what's my actual cost to carry with interest rates right now? Because these are some still very respectable levels. You can't go broke making a profit.
Yeah, and we saw the export program. You look at the sales totals on a weekly basis, we're about half of where we were a year ago. So where is that demand coming from? What's keeping that cash corn basis so strong and hot?
What we hear from merchandisers and some of our contacts at the elevators that are originators is really that the elevators might think there's even less grain out there than what USDA is showing. And certainly we'll see January 12th. What happens there in the next report. But that could be an indication that they're trying to grab what they can and be selling as old crop.
Let's also talk about the fact that we're end of the year. We flip the calendar, get into January. I know we've been cold. We maybe haven't been moving as much grain, but do you anticipate we're going to see a lot of grain sales after the first of the year, cash-wise, just because of income averaging or anything like that?
Yeah, so there's two factors of that, looking at the end of the year and income averaging. One place would be just looking in our own portfolio of what's delivered and what's getting paid out. We have the highest ratio of deferred payments, even higher than last year, in a lot of places, it's been a very profitable couple years, especially this year. And that's causing a lot of that payment to be deferred to next year. But then also, same thing, we're seeing a larger than normal uptick in deliveries starting up in January here. On a lot of producers in the past that otherwise were delivering all their beans, for instance, at harvest, or were delivering more of their corn at harvest, storing and holding just because they were so profitable on what their harvest sales were, that now it's worth it for them to wait just from an income standpoint.
Yeah. Are a lot of livestock producers getting, or do they have their feed needs pretty much met here? Or do you see that keeping cash basis levels really strong through winter?
That's definitely been buoying cash basis levels. I mean, we've got livestock producers looking for any type of alternatives that they can. Availability has been an issue. Transportation has been a big issue. Even if you're buying DDGs, let's say, as a co-product out there, transportation has been very difficult. So even if you can buy it at a really good price, just with all the winter storms and everything, logistically, it's been a big challenge. And availability of trucks around the holidays too. Yeah.
Trucks, rail, all that's been compromised. What about Mississippi River water levels? Have they improved any, or what are we moving?
Same story, different day. I mean, we're seeing barges being backed up, not enough capacity there. And then also adding to it, normally you would alleviate some of that pressure with containers heading back west, mostly going to Asia or going down south to Texas. But even those containers are not widely as available. So if you're looking around at anybody storing any type of grain co-products right now, they are filled up, which creates great prices for livestock producers, but it's just a question of availability. So if you're in Texas waiting for a train or something, you're going to be waiting a little bit longer.
Okay. Any other final marketing recommendations that you have here before I let you go?
Everybody take a look at where you're sold at for the year. Call your accountant if you haven't talked to them. Try to clean everything up. Also, if you're sitting around in the office the next few days looking for something to do, go through all your scale tickets, all your numbers. Take this time to update that. Have an extra cup of coffee. Get your numbers straight before we get into January. You'll thank me later.
All right. Great advice. Thanks for joining us, Nick Cholas with Farmers Keeper here on Markets Now.